Hi, I'm John Prasinos, Editorial Director of Investing Daily. Welcome to my video update for Monday, November 30th. I hope all of you had a great Thanksgiving holiday. Stocks have been soaring to new highs, with the Dow Jones Industrial Average at one point smashing through the 30,000 barrier. But as the coronavirus pandemic gets worse, can the momentum last? One thing is certain. As the holiday shopping season gets underway, the coronavirus pandemic is hastening the transition to e-commerce sales. Before I get to this year's holiday retail picture, let's recap last week's market action and see what it portends for the coming weeks. The past week witnessed encouraging news about coronavirus vaccines, which helped drive the Dow up more than 12% for the month. The Dow surpassed the 30,000 barrier for the first time. The S&P 500, NASDAQ, and Russell 2000 all posted record highs as well. Trading was shortened last week with the markets closed on Thanksgiving Day and shutting early on Friday. The dominant news was the continuing movement to a new president, which has lifted investor moods and set the table for growth in 2021. The following chart shows last week's stock market gains. Does the relief rally have enough momentum to last into the new year? I think so, yes. However, we'll experience considerable volatility along the way. The coronavirus is resurgent and unemployment is rising, and yet retail sales remain robust. Of course, the traditional start to the seasonal spending madness is Black Friday, the day after Thanksgiving. Bricks and mortar retailers reported smaller crowds for Black Friday last week amid a third wave of the coronavirus that has brought greater social distancing restrictions. E-commerce sales, however, were dramatically higher as millions of shoppers avoided the crowds to hunt for bargains online. The sales numbers are still getting crunched, but the trend is clear. According to Deloitte's annual holiday retail survey, the pandemic is accelerating the already existing tendencies of shoppers to skip the crowds and hunt for bargains online. According to Deloitte's widely followed survey, consumers expect to spend only 28% of their holiday budget on bricks and mortar stores this year. That's down from 36% last year and 46% in 2015. However, since 2015, the online share of holiday spending has climbed from 28% to 46%. Take a look at my second chart. Preliminary data from Adobe Analytics estimates that e-commerce sales in the U.S. for Black Friday this year hit between $8.9 billion and $10.6 billion, which represents year-over-year growth of between 20% and 42%. Adobe expects the final tally to show that Black Friday and Cyber Monday were the two biggest online sales days in history. The increase in e-commerce sales is remarkable in light of the worsening employment picture. As COVID-19 rages throughout the country, business lockdowns are back, and so is rising unemployment. According to the U.S. Department of Labor's latest jobs report released on November 25, the number of Americans newly applying for unemployment benefits through state programs increased for the second consecutive week. My third chart paints a grim employment picture. Take a look. To be sure, jobless claims are considerably lower from their unprecedented highs in late March and early April, but the number of weekly initial claims remains alarmingly high. In the week ended November 21, 778,000 Americans newly applied for unemployment benefits. Insured unemployment through regular state programs hovers at 6 million for the week ended November 7, and the total number of people obtaining unemployment assistance remains above 20 million. At the same time, new fiscal stimulus isn't likely to arrive until next year, even though enhanced unemployment benefits are due to expire in December. The pandemic will only make the jobs situation worse. According to data updated on November 25 by the Centers for Disease Control and Prevention, the U.S. COVID-19 death toll could reach 321,000 by mid-December. Investors are bullish about the incoming Biden administration, but until Inauguration Day, we'll probably experience a bumpy ride. The uncertain conditions that I've just described make gold a smart investment play now. Gold is a classic safe haven during crises. The best way to gain exposure to gold is by purchasing shares of mining companies which use operating leverage to exponentially benefit from rising gold prices. My article on the Investing Daily website that accompanies this video contains a link to our favorite gold mining stock. This under-the-radar gold miner is ready to hand investors outsized returns. Well, that should do it for today. If you'd like to contact me, just shoot an email to mailbag@investingdaily.com. In the meantime, please take the pandemic seriously and protect yourself and your family. Thanks for watching.